Good morning, you're watching Market Cafe on ET Now with me, Somit Sarkar, and my co-anchor, Ankita Saxena. Straight up, first let's look at how the US markets have performed, Ankita. We're largely flat on the back of possible rate hikes.
Yes, good morning to you, Somit, and good morning, everyone. And we did see the US markets fighting hard to recover the sell-off that we saw on Tuesday. Now, yesterday, Dow Jones Industrial Average was a tad lower on Wednesday as the market fought to overcome the Tuesday sell-off, spurred by comments, of course, from the Federal Reserve Chairman Jerome Powell hinting at higher interest rate hikes for a longer period of time. Now, the Dow dipped 58 points, largely flat in trade, while the S&P 500 edged 0.1% higher, again very flat, ended the day in the green. The Nasdaq Composite rose 0.4% in trade. Yesterday, fresh job market data came out that fueled investor concerns that bigger rate increases may be ahead. Now, data showed that job openings fell less than expected in January, while a stronger than expected February private payrolls report affirmed that the economy is standing strong despite the central bank's hiking rates. Now, all of this data point that is coming out from the US is hinting towards a strong and a resilient economy, confirming to what Jerome Powell said on Tuesday that, the ultimate rate might be higher than what is being penciled in. The European markets, however, closed slightly higher. The Pan-European Stock 600 index provisionally closed up 0.1%, again largely flat in the green, with all the sectors and major bourses pointing in the opposite directions. DAX was up 0.4% and FTSE was up 0.1%, largely flat, but ended the day in the green. So these were the global cues coming in from the US and European markets. Take us through, where's the crude at, Summit?
Well, when it comes to Brent crude, if you see, they continue to slip on rate hike impact and weak US demand data. In fact, one of the senators has also reintroduced a legislation to pressure OPEC to stop making output cuts. And on the back of these factors, if you see, crude was down at around $82.3 per barrel, while WTI, which is the benchmark on the western side, and that traded at around $76.4 per barrel. Now, the Singapore gross refining margin, which is the key benchmark for Asian refiners, that also trended lower marginally at around $7.4 per barrel as compared to $7.8 that we had seen yesterday. All the product prices were down sharply. It is the lower crude that has been helping the Singapore gross refining margin or the refining margins for a refiner to stay or to hold up about at a comfortable level of around $7 per barrel. On the gas side, if you see Henry Hub, which is the benchmark of gas prices in the US market, that was also down at around $2.5 per MMBTU on a milder weather forecast and because of lower export data that is coming in, while the gas prices in the Asian market, that is the Japan-Korea market, stayed largely flat at around $13.9 per MMBTU, while the marketing margins, which is important for oil marketing companies like Indian Oil Corporation, BPCL and HPCL, that trended higher because of lower crude. For diesel, it was at around 2.2 rupees per litre, while for petrol, it trended higher at around 9.6 rupees per litre.
All right, and before we begin with the rest of the news flow, let's quickly take you through the events that you need to keep an eye out on. Now, first up, in the US markets, Joe Biden will release the budget proposal for FY24, key important data that we will be keeping an eye out on. And of course, back in Maharashtra, we have the budget that will be tabled as of today. And for Jindal Stainless Steel, today is the ex-date for the amalgamation. These are the events that we need to watch out for today. What are the global headlines, Somit? Take us through what the news is.
Well, firstly, Fed Chair Jeremy Powell reaffirmed that they would need to go ahead with rate hikes further, but would also said that it would all depend on the incoming data. Now, he said that no decision has been made yet on the pace of rate hikes, but also warned that inflation continues to remain high and their long-term goal is to bring it down to 2%. Listen into what he has to say.
Larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook. It's certainly conducted under Vice Chair Barr's leadership with input from the staff and, discussions with governors on that committee. And I'm kept broadly apprised about what's going on. But the bottom line is nothing has been proposed to the board. Nothing has been formalized at this point. It's a lot of work that's going on. I think discussions are going on, meetings with industry and that kind of thing. When we get to that to the place where that's appropriate, the board will be carefully briefed. Ultimately, we'll vote on a proposal. We have no role and seek no role in what is really at the heart of fiscal policy, except I will limit myself to the two things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. Two really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default or something of that nature, which we don't think will happen here, but no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
So more rate hikes coming in there, according to Jerome Powell. And we have Peter Cardillo, who's the chief market economist of Spartan Capital Securities, weighing in on this. Let's take a look.
I would say around 5.5, possibly 5.60. And of course, we're looking probably at a 0.5 point rate hike in March. The Fed is trying to correct its mistakes. They failed on inflation. They were blindsided by the COVID situation. They kept their foot to the pedal, injecting trillions of dollars into the economy. And as a result of that, we wound up with inflation that we didn't see in 40 years. So now they're trying to correct their mistakes, and at the cost of putting the U.S. economy and dragging the global economy into a more severe recession that the markets were anticipating. In fact, if you noticed yesterday and today, while most markets were under severe pressure, what did we see? We saw yields actually coming down, just like they're down this morning. So what is that telling us? Well, it's telling us that now the market is looking forward post-recession. And the fact that the 2- and 10-year spread at one point was at a full percentage point differential indicates a steeper recession ahead.
Well, inflation is stubbornly higher than the Federal Reserve's tolerance band, and that means that there's a good chance it could push interest rates to a 20-year high of 6%, says Blackrock's Chief Investment Officer. Now, Rick Ryder, who's the CIO at the world's biggest asset manager company, pointed to the US economy's resilience in the face of aggressive rate hikes.
And the US labor market is in a sweet spot as companies continued to add jobs ahead of street estimates. According to payroll services firm ADP, private payrolls were up by 242,000 for the month of February after an upwardly revised 119,000 increase last month.
Well, Germany is reportedly considering banning select components from Chinese firms, including names like Huawei and ZTE, under the 5G networks. Now, a Chinese embassy spokesperson says that they are strongly dissatisfied with the said decision if true. Now, do remember, Huawei has been accused by numerous governments of posing national security threat.
And staying with China, the country is now mulling to overhaul its financial regulatory system by combining the central bank and securities regulator under one entity. This according to a draft released from the ongoing parliamentary meeting. The moves come as Beijing of late has ramped up regulations on the parts of the economy developing quickly.
Well, United Nations and Ukraine call for extension that will allow export of Russian and Ukrainian wheat and fertilizer through the Black Sea. Now, important to note here is that both Russia and Ukraine had signed this United Nations-backed deal for a starter of 120 days last July, an agreement which was seen upholding the significance of averting the threats of global food crisis.
And lender to the crypto industry Silver Capital has said that it is winding down on operations and liquidating its bank. Silvergate is one of the 2 select banks for crypto companies. Cash-strapped crypto exchange FTX was a major Silvergate customer.
Well, all eyes on the 2 days a Bank of Japan's monetary policy meeting. Investors eyeing policy changes coupled with governor's final policy surprise.
And the United Kingdom has announced a new law to crack down on illegal migrants. As per the new law, anyone entering Britain illegally will be detained and swiftly removed to their own country. Prime Minister Rishi Sunak has warned illegal immigrants entering Britain, saying that every illegal immigrant crossing the UK border will be deported and will not be able to stay in the country or claim asylum. He further said that the government tried it every other way and it did not work out, following which they had to take this step. Here's Rishi Sunak's rationale. Listen in.
All I can say is, we have tried it every other way and it has not worked. So I say again, my policy is very simple. It is this country and your government who should decide who comes here, not criminal gangs. People must know that if they come here illegally, it will result in their detention and swift removal. Once this happens, and they know it will happen, they will not come and the boats will stop.
Well, for now, let's slip into a short break and we'll be back with more news on the other side. Back, you're watching Market Cafe on ET Now with me, Somit Sarkar, and my co-anchor Ankita Saxena. First up, if you see how foreign flows have moved in the second half of February 2023, there was an outflow of around $57 million, taking the total outflow for the calendar year so far 2023 to close to $4.7 billion. Now, two sectors that remain in focus. Firstly is the financial service and second is the energy, because both these sectors have seen two different halves in the month of February. For the first half of Feb, if you see, financial service sector had seen an highest inflow while the energy sector had seen the highest outflow, which was also on account of the Adani Group stocks. However, in the second half, the tables have turned. Now, financial service has seen the highest outflow while the energy sector has seen a meaningful inflow of $156 million. In fact, the inflow in the energy sector is the first after the 5 consecutive quarters of outflow that we had seen, and the sector has seen a significant outflow from FIIs in the last 6 months, that is the energy sector, and the total outflow is currently at around $2.1 billion in the last 6 months. However, for the second half, if you see, the energy sector has seen an inflow of around $156 million, while the financial service has seen the highest outflow at around $274 million. Now, software and service sector also saw a small outflow of around $86 million, and during this period, if you see, the Nifty IT index was down by around 4%. Now, commercial and professional service sector, now that has seen the largest inflow in the second half of Feb 2023 at close to $261 million, followed by the capital goods sector with an inflow of close to $179 million. One thing to point out when it comes to the cap goods sector is the fact that the stance of FIIs have changed from being underweight to overweight in the last 2 months. In fact, the sector has seen consistent inflow from FIIs, while with the total investment in the last 6 months being close to $2.6 billion.
All right, and the Indian insurance space has reported a muted 10% year-on-year growth in the retail APE. My colleague Winnie has more details on the data coming in on the space. Over to you, Winnie.
Absolutely. This is the data that we're getting in from the Indian life insurance industry. Muted growth of around 10% that is coming on a year-on-year basis on their retail APE growth for the month of February. Now, when you look at it in terms of the public players as well as the private players, very divergent numbers that are coming in over there. Overall, when you look at it, in terms of private sector, we're seeing a growth of 18.2%, while LIC, the retail APE growth, is seeing a decline of 3% on a year-on-year basis. So, look at the difference. While private players saw a growth, we saw that the public player, LIC, actually saw a decline coming in over there. Now, in terms of the divergent growth trend for the month versus for LIC is something that we're watching out for as well. Other than that, the pre-booking for high-ticket and non-linked LIC led to the ticket size expansion, and policy continues to see strong decline. This is especially coming in because of the proposed taxation changes that have been made by the union in the union budget of FY24. So obviously because of that, we're seeing some pre-booking coming in for the higher ticket size as well. Now, among the listed players, HDFC Life reported a good set of numbers, while ticket size increase was something that helped ICICI Prudential Life as well as Max Life as well. So overall, in terms of the listed player, HDFC Life saw a strong growth of 27% and a ticket size growth of around 19% coming in there, while ICICI Prudential Life saw a growth of 10% on a year-on-year basis. Keep an eye out on this insurance data that we are coming in, divergent data of versus when you compare private versus public players.
Well, thank you, Vinny, for all those details when it comes to the life insurance space. Moving on, it was a ET Now news break which was confirmed, and the fact that Kirloskar Oil had also hit a 20% upper circuit in trade yesterday. Now, this was after the Kulkarni family sold their entire stake in Kirloskar Oil Engine. Now, if you see, they held close to 18% stake, and the entire stake was offloaded in the market worth close to 900 crore rupees. Now, the buyers of this, now there were important buyers coming in like Franklin Templeton Mutual Fund, Nomura, Max Life Insurance, HSBC Mutual Fund and Birla Sun Life Insurance. So do keep an eye out for this stock, because yesterday it had hit its 52-week high, and now good number of good names like HSBC and all FIs and the mutual funds have bought in shares in Kirloskar Oil.
Well, it's time for us to take a quick breather. You don't go anywhere. There's lots more stock-specific action on the other side of this break. Cafe. Let's quickly look at where the Asian markets are at right now. Now, let's today, of course, Bank of Japan will kick off its two-day monetary policy meeting, and all the investors are really eyeing any policy changes that could come in there. And on the back of that, we can see Nikkei is up more than 0.5% there. Also, Shanghai opened up in the red, but has now ticked up in the green. Very flat, but it's up 0.1% right now in trade. Hang Seng is up 0.2%, and Kospi is down in the red, down 0.2%. So largely mixed cues. If you look at the US stock futures are also in the red. Dow is down 0.1%, S&P 500 0.2%, and Nasdaq 0.3%. So all in the red. Look at the SGX Nifty on your screens right now, as flat as it can get in the green, just up 2 points. So I mean, we can expect a rather flattish start to the Indian markets as well.
Well, thank you for all those details. Moving on, now we'll focus more on the domestic side news, and we have Ashesha and Vamakshi both joining us in the studio. We'll start off with Ashesha first on the stocks and news.
Hi, good morning. So Bharat Forge will be the first one in focus in today's trading session. This is because the company has gone ahead and informed the exchanges that they have inaugurated the first e-bike manufacturing facility in Chakan, MIDC. It has a production capacity of about 60,000 units, and they can scale it up to 1 lakh units per annum. So on the back of this inauguration of manufacturing facility news that has come in, this particular counter will be in focus in today's trading session. Apart from that, Kirloskar Oil Engines will also be in focus on the back of the big block deal that took place yesterday, where Kulkarni family, which is a part of the promoter group, have offloaded 18% stake for about 865 crore rupees. And buyers of this block deal include the likes of Franklin Templeton Mutual Fund, Nomura, Max Life Insurance Company, HSBC Mutual Fund. SBI will also be in focus, and that is because they've raised nearly 3,700 crore rupees through AT1 bonds, and this particular bond issue was subscribed about 2.3 times. So on the back of this fundraise news that has come in, State Bank of India will also be in focus in today's trading session. Moving on to Muthoot Finance then, where Board of Directors will be considering fundraising today. Apart from this, Inox Wind Energy will also be in focus, and that is because they will be considering rights issue allotment in the Board of Directors meeting that is scheduled to happen today. And they will also be considering and deliberating on the proposed scheme of amalgamation between Inox Wind Energy Limited and Ind Eco Ventures Limited, which is a wholly owned subsidiary of the company. So on account of this, Muthoot Finance will also be in focus in today's trading session.
All right, thank you so much for that, Ashesha. We will keep an eye out on all those stocks. But of course, Vamakshi, you have all the brokerage notes coming in this morning. Tell us, what are the brokerages saying?
Well, absolutely. A very good morning to all of you all. Let's first start off with M&M. We have a note that has come in from Motilal Oswal, and what they're highlighting is that SUV is holding very strong amid macro challenges. The chip supply situation has seemed to be improving, but it is still restricting the full capacity ramp up. FY24 tractor growth is expected to be low on the back of a high base, even if the monsoons are normal. Now, what they're also expecting that margin expansion is quite likely, but commodity price inflation is a big risk to that. So overall, positive commentary coming in from Motilal Oswal. They've maintained a buy rating, target price of 1,525 per share. The next one on our radar is Asian Paints. We have a note that has come in from Macquarie, and what they're highlighting is that capacity addition approach by Grasim is expected to have a limited impact on Asian Paints. In fact, they believe that Asian Paints as a brand would be able to offset the pricing competition. The near-term demand commentary by the management remains quite supportive, and in fact, peers are also pointing towards healthy trends. They're quite confident about Asian Paints' EBITDA margin expansion as well. So given all these positive factors, we have Macquarie maintaining an outperform rating on Asian Paints, target price of 3,600 per share. And lastly, we will be watching out for TCS. We have a note that has come in from Citi. Now, TCS has started to see some delay in decision making in the European region. The US aggregate outlook is also looking quite mixed for the next couple of months. TCS is seeing pricing improvement only in certain segments, and it is in fact expecting to finish the fourth quarter of this financial year at 25% EBIT margins. So given all these factors, Citi has maintained its sell rating on TCS given a target price of 2,990 per share.
Well, thank you, Amakshi, for giving us all those details about the brokerage notes. Moving on to the mutual fund industry. Now, the Axis Mutual Fund is looking to get in Ashish Gupta, the former research head of Credit Suisse India, as its chief investment officer. Now, the appointment of Gupta comes as the country's 7th largest asset manager looks to regain investor confidence following allegations of front-running against its former chief trader Viresh Joshi. Now, Gupta worked with Credit Suisse for nearly 14 years, and this will be Gupta's first assignment as a fund manager. Now, the mutual fund industry watchers believe that the new role will be a challenge for Gupta, who has not yet handled any public money.
And of course, we had caught up with Devina Mehra of First Global, and this is what she had to say.
Yeah, so I mean, we follow an artificial intelligence and machine learning system as our base. So that system has rarely liked the Adani group, barring the cement stocks at times. So I think we did hold Adani ports also for a short time in the middle. So as part of our risk management system and the fact that in terms of financials, it was very difficult to justify the valuations. The most of the other Adani names we have never bought, and we still don't hold those. As far as the banks are concerned, we after being very negative and with very low weight in banks, right, from 2020, 2021, and from the middle of 2022, we went market weight in banks, which because of price movement then became somewhat overweight. And even before the Adani group had recovered, I was on TV and I had said that, the reaction on the PSU banks and banking in general seems to be overdone because it had affected even banks which had no exposure to the group. So we have continued to hold the banks, and we still continue to hold them. So that I think was a more of a temporary issue for the banking sector. I don't see an imminent danger from this angle. Of course, I mean, in banking, negative surprises hide somewhere or the other and may come out at some stage. But at the moment, we continue to be reasonably positive on banks. Good part for people who have limited time to spend on the investing game is that most of your returns, 80 to 90%, come from asset allocation, not from stock selection. So we all like to talk about what was the last multi-bagger or what's the next multi-bagger at parties, but that is for entertainment. So the real important issue is to get your asset allocation right. So I am not a votary ever that even if you are young and in a good job, that you should put 100% of your money in equity, because you will and may need some money, maybe for higher education, maybe for to down payment on a house or an emergency, so whatever. So have an asset allocation. Of course, it will be more towards equity when you are younger. So because in equity, the predictability is over the long term, not over 1 or 2 years. So if you are only in, let's say, the Indian stock market, that is not good enough, because like in the course of my career, from the time I started when US dollar was 12 rupees, it is now 82, 83 rupees. So that's an 85% depreciation right there. So look at global investing. And global investing again does not mean buying a single other country, which is like people think that I bought a NASDAQ ETF and hence I'm globally diversified. That's simply not good enough, which is why we introduced a globally diversified product which starts as low as $10,000, only around 8 lakh rupees, because this again is a cause, because I think, every Indian investor should have a reasonable part of their portfolio in the global basket. So that is the thing. The other important tip I'd like to give is that don't be at either end of the risk spectrum, because last year I used to see people who have never even invested in equity going straight from fixed deposits to crypto and option trading. So that kind of thing can be disastrous. So don't be at either end of the risk spectrum, because if you're in 100% safe assets for 100% of your corpus, then you will barely beat inflation, if that. So you can't be there either. So women, often it is said, are great at savings but not so good at investing. So you have a balanced portfolio where you have different types of assets, including a little bit of gold and so on, but have a diversified asset allocation.
All right, those are certainly pearls of wisdom, not just for women, but for everyone out there. In your years of investing and the experience and lessons that you've learned along the way, while you did give us a sense as to what the asset allocation should be, are there any, hard don'ts in terms of investing, or even in a market environment like this, certain companies that you believe one should really refrain from putting their money in? What would be your take?
Rather than talk about which specific companies today, I would say that risk management should be very central to whatever investing you are doing. At least have 25, 30 stocks, and it's not just the number of stocks, it should be across sectors.
Well, data patterns, that is another stock that we should keep an eye out for, because the company yesterday night opened its QIP for investors. Now, how much the company is looking to raise and what could be the potential use of this proceeds, we'll get to know all that from Sharad, who's joining us in the studio.
Well, yes, the details are being finalized. It will be coming on March 13, and the number which you'll be looking at, the floor price or the issue price right now, would be around 1285 rupees per share. That's roughly translating to 1% of a discount in current prices, and there can be a 5% discount to it. Now, this fundraise can lead to an equity dilution of almost 7% on an expanded equity base, and the promoter holding could fall to almost 43% from the current 46%. Now, the key commentaries also actually came in capital raise in the third quarter's con call itself. The company is expected to raise almost 500 crore rupees via equity, and the fund would be utilized for capex, net working capital, and also to test the infra over the next 3 to 5 years. Apart from this, of course, the company is intending this fund expansion to do via internal funds as well as the large orders which would be covering the cost of setting up the projects. But there are key domestic shareholders also involved in the company. They include likes such as Axis Mutual Fund, IFL Mutual Fund, both of them holding almost 1.3% stake apiece, and also overall the mutual fund houses are holding 5.6% stake in the company. Amongst the insurance plays, Tata AI Insurance also has almost 1.6% stake in the company. So we spoke about the key shareholders in the data patterns, but what are the future triggers going ahead for the company? And of course, the first one being a strong, healthy pipeline, orders coming between 2,000 to 3,000 odd crore rupees. A lot of interest coming from the defense electronics, that this actually provides a 1.5 lakh crore of market potential. And of course, they're having strong orders coming from BrahMos, fighter craft and airborne related projects. So that will be something which you'll be watching out for. And lastly, the company would be a beneficiary of indigenization of raw material components.
All right, thank you so much for that, Sharad. But with that, we're completely out of time on this one. You don't go anywhere. There's lots more coming up on the market. But thank you so much for tuning in.